My name is David Crowter. I'm one of the tax partners here at Carpenter Box, and I look after our private client team. I just want to give a bit of reaction to yesterday's budget, and in particular on those issues that are affecting our private clients, which are individuals and trusts. The first thing I want to talk about is property transactions. So there were changes yesterday to CGT and to stamp duty land tax, sort of affecting residential property. Only some residential property transactions. So if you're buying something that is that have more than one dwelling, that the rate of SDLT may increase from June. So if you've got that sort of transaction on the horizon, is that something you need to accelerate? The capital gains tax rate for residential property is actually reducing in April. So sometimes that's an indicator that you might want to defer that transaction. So we actually see a bit of disruption over the next 3 months as people try to jostle to get the best outcome for their particular transaction. So if you're involved in any transaction like that, please speak to us and we'll give you a steer. The second thing that emerged yesterday was something that was trailed, I suppose, in advance, which is the 2% cut to national insurance. This is on top of a 2% cut to national insurance that we had in April of 2023. So that's a 4% reduction in NICs. The one observation I would make is that in recent years we've seen an increase in corporation tax. We've seen an increase in dividend tax. So if you're running your own business, particularly if you're running a limited company, what is the appropriate method of you now rewarding yourself from that business? And does the two lots of 2% NI reductions, does that impact the way that you want to reward yourself from your business? So is it time to give some thought to that remuneration strategy? Possibly. Please speak to us about that. A couple of other important changes, but operative from April 2025. The first one is abolishing the tax release for furnished holiday letting. So this is potentially something that's very, very significant. It becomes a challenge to give some very clear guidance on this because the remarks, the commentary from yesterday is very limited. And of course, this is something that's going to be contained in a Finance Act in 2025. And of course, we've got the small matter of a general election between now and that time. So in terms of certainty, I'm afraid there is none at this particular point in time because there is every prospect that the people who are writing that Finance Act in 2025 will not be the government that we have today. Looking at one betting website this morning, it says that having a Conservative majority, they'll give you 14-1 odds on that at the moment. So we do need to bear that in mind. Nevertheless, in the meantime, I think what we can say to people who are engaged in furnished holiday lettings is that the regime, possibly from April 2025, is not going to get any better. I spoke to one client earlier this morning who's considering incorporating their furnished holiday letting business to, you might say, maintain the relief for interest costs, which is significant in their business. So it's entirely possible that there is some action that you need to take between now and April of 2025. But from April 2025 is the taxation of non-doms. A non-dom is typically somebody who often was born abroad and is living in the UK for some temporary purpose. And it's proposed that the taxing regime that applies to those will be abolished from April 2025 and replaced with a new regime. It's very difficult at this stage to identify very clear actions that might be possible for those individuals, again, because of the fact it's going to go through Parliament and we could possibly change of government between now and when they come into fruition. So what I'll be saying to anyone who's a non-dom is that we need to watch this space and see how draft legislation emerges, what changes are made, what commentary we get from the Labour Party and others. And I think it's possible something that we need to focus on maybe later on in the year when actually more is known. In general, I think there's plenty of new information out there, but we've got to tread carefully because I think you might say that the format of those new rules could well be changed over the next 12 months. One final point, which wasn't in yesterday's budget, which I think is relevant to individuals, is pensions tax relief. At the moment, we've got an unlimited lifetime allowance. And it's possible that a change of government would see that reduced and the amount of annual contributions that you could make reduced. So we certainly have a number of clients who are trying to make significant pension savings in March, and then also doing so early in the new year to take advantage of those current rules. So yeah, one final point is around perhaps considering doing your pension savings before the general election. Thank you very much for joining. Hope that gives you some helpful insights. More information is available on our website, and obviously you can get in contact with me or anyone else who looks after you here at Carpenter Box.
This is Carpenter Box Financial Advisors. Thank you for watching today's video. For more information on ways to secure your financial future, visit our website. For more videos about financial planning, please like and subscribe to stay up to date.